Hello and happy Friday, everyone. Welcome to the Wall Street Blockchain Alliance's Crypto Roundup, Friday, May 1st, 2026. Ron Quaranta here with my amazing friend and co-host, David Brill. Josh Klayman may or may not be on location. David, I have absolutely no idea. Before we begin, for everyone watching on LinkedIn Live and YouTube and X, thank you so much for joining us. If you've got questions for David or I, put them in the chat. We'll try to address them as quickly as we can. Our usual disclaimers, obviously nothing David or I are talking about is any sort of investment or legal advice. And really what we discuss are our own personal opinions, not necessarily the opinions of our respective firms. David, sources tell me the Learjet just touched down for you yesterday. You were in Vegas at Bitcoin 2026. There's a lot to cover. Buddy, welcome back.
Thanks, Ron. Bitcoin 2026, is a really interesting example of how things have migrated. The first couple of years of the Bitcoin conference, you saw like a lot of people wearing T-shirts and, interesting hairdos and just sort of like really, all types of folks coming in. And this year, it had a more of an institutional feel. Different kind of crowd. I don't think it was as crowded as last year. I don't think it was, it was definitely, the vibe was a little different than last year, but we had some really popular speakers who made, interesting comments. And I still think that there's a very favorable tone, in the market and in the industry.
David, let me ask you this question. I was thinking about it. I did not get the chance to go to Bitcoin 2026. I will see you in Miami with a whole bunch of folks at Consensus next week who could talk about that as well. It feels like we got a lot of traction over the past year and change with new administration change. They are pro-crypto, allegedly. Is it more than that, though? Is it not just, is it beyond the rah-rah of we've got a new administration, it's not regulation by enforcement anymore? Like, what are those use cases that they're pointing to that give them that confidence?
Well, look, even though it's not Bitcoin related, we have Genius. We have, we're seeing use cases for real world tokenization.
Yeah.
So there are a lot of things, when they're talking about the Lightning Network and talking about using Bitcoin, more as a payment rails and things like that. So I do think there's a lot coming, and there's a lot of interest in it. And then obviously Michael Saylor had a fully packed crowd talking about his STRC product, which is a really interesting product. I don't know if I believe in any product that's like guaranteeing you double-digit yield, but I mean, he makes a persuasive case for why he believes it's possible. And I think that the market has looked really favorable at it. And look, I support all, different products in the industry. I think the challenge is, that product, the assumption is that sort of Bitcoin is up and to the right on a sort of year over year basis. And I guess the question is, if you're an investor, is, do you see it the same way? But I think, he gave an interesting presentation, and I'd encourage people to listen to it if they want to hear what he had to say. And, like everything else, everybody, can draw their own conclusions, but he definitely drew a big crowd. Tether CEO Pedro, I always butcher his last name, Andrino, gave a talk about, digitized privacy and, economic freedom. And it was interesting. And, Tether's really been at the forefront of doing a lot of interesting things too. So good crowd, different kind of crowd, but, it was good to see robust conversations happen.
David, there's some stuff to unpack there, and I'm with you. So let's talk about strategy. And again, not an endorsement of strategy, the company, nor the stock, nor the product, but there really seems to be this sense that Michael Saylor and strategy will make it a self-fulfilling prophecy. I saw the news recently that, I forgot what the percentage is, someone in the audience could reach out. They are the largest corporate holder of Bitcoin by far. I think, when you look at Tom Lee's organization on the ETH side. But David, let me ask this question. In that context, are DATCOs dead? With the exception of strategy and the ETH or Tom Lee group?
I see like combinations with DATCOs. I could see that several DATCOs kind of merging. And I also told you, like we talked about before, I'm a big believer in a DATCO that's staking, that's running validators, that's holding. They really need to have a good treasury strategy. And I think some of them just ran into the market to buy once they had capital invest. And, they didn't really do it strategically, or they just did it at the time that they could have access. And
Yeah.
obviously that kind of, they paid the price for that, and that they bought very high. So I don't think there's not a use case. I just think there has to be one that's more than just holding an asset.
Yeah, David, thanks so much. Shout out Rumi from Lagos, Nigeria, sending love. Rumi, thank you so much for joining us. David, when we look at that though, and I'm going to say something. I think a lot of the DATCOs that popped up misunderstood how difficult really good treasury management capabilities are broadly. But when we talk about this acquisition and these mergers, is there appetite for that in the ecosystem?
Look, I think, if they stare into the mirror and there's an opportunity to create an entity with 2 of them or 3 of them, and there's economies of scale, and I think, sure, I think you have to look at what's best interest of the shareholders. So I think it's a possibility. Um, so I think it's something that could happen in the nearish future.
Yeah.
But also, if we did see prices go higher, then some of them may be less underwater too. So
Yeah. David, it's interesting as I look at these companies as well. Let's talk economics and let's talk markets.
yeah,
I think we can't really separate the two. And you and I text message about it pretty frequently. I'm pretty sure that's why Josh isn't joining us today. She's just sick and tired of our text messages. But when you look at economic activity, and I think you and I can peel back the layers of that a little bit, is it still the geopolitical that's trapping us in a range? Obviously we look at Bitcoin, we look at Ether. We just can't seem to hold anything above 78, 79. Ether, same thing. We really can't hold anything above 23, 2400. I'm trying to figure out what the headwind is, and my argument is that there's like 5 of them. Am I overthinking the challenges here?
no, I don't think so. I mean, I think, look at some of the challenges. We're not going to see interest rates reduced in the near term. I think there are a few people voting for raising interest rates, as I recall from the last meeting.
Yeah.
So that's one headwind. Look, the situation in the Middle East is volatile in terms of, are we going to continue the war on? Is there going to be, a lasting peace? I don't think anybody thinks there's going to be a lasting peace right now. I think more, we're seeing lulls and things like that. And so, I think in the US, we're being insulated from the issues with oil that maybe Europe and other places are facing.
Yeah.
So I think that's another headwind. I think that we are seeing a lot of money, going into ETFs. I was doing some research and I saw in Q1 there was about almost 19 billion flow into spot Bitcoin ETFs, and IBITS alone is almost at $55 billion. So, that there's a lot of institutional money coming in, and we've seen several banks. I think Morgan Stanley now has a Bitcoin ETF, and some more are coming. So I think we have that, and then I think the other big thing to figure out is, do we still have whales selling?
Yeah.
If you think about it, Ron, like the one thing we all underestimated was how much whale selling there would be.
Yeah.
And so, has that abated, or is that still going on in the background?
Yeah, and I haven't checked the whale data in a little bit. I just want to come back to Rumi over in Nigeria. Rumi, thanks so much. Strategy could also be a challenge in the future. They are leveraging Bitcoin. That could be a black swan. I get his point. Absolutely. David, when we talk about some of what you're alluding to here, you and I often talk about this kind of K-shaped economy, and it makes me wonder. So you unpacked a lot there. Will the K-shaped economy drive who is buying Bitcoin? And the reason I'm saying that is we see inflows to Bitcoin ETFs. News a few weeks ago about Schwab, I think it was Schwab, offering crypto spot trading to its customers. You and I have been looking for the broker dealers to be able to do that years ago. But again, I'm wondering, what's the catalyst that prevents that from being more widely used? Is it still an education issue? Is it still people would rather buy it in their 401k or IRA?
Well, we can't underestimate how much money are in people's 401ks and IRAs. So I guess one of the views could be, one of the things I'm thinking about is, do we need clarity to allow people to buy crypto and Bitcoin in their 401ks or IRAs? Like, are those two linked? And in some ways they are linked. In other ways, I think you can do it without that. But obviously you can buy the ETFs wherever. But I think that, especially in the 401ks, you're really limited by choice.
Yeah.
So until that market is untapped, you have a whole pool of liquidity that you can't touch.
Yeah.
And I think you can't underestimate the interest rate environment and the Iran overhang as far as the excitement to be going into crypto right now.
Yeah.
But you have to remember too, Ron, that crypto is a famous FOMO, FOMO instrument, and so if we were to break through 80 and people started feeling like, oh, the mojo is back, or however, the momentum is back, you could
Yeah.
see it move very quickly.
Yeah.
So, we do have to be cognizant of that. But
It,
I do think these two macro issues are like putting a sort of strain on how much higher we could go.
yeah, and David, I get that perspective. So let's talk about the interest rate decision this past week, which was to stay put. You and I like to omit the politics of it. I feel we're at a point where we can't avoid some of the politics conversation. When you look at the Fed, and Chair Powell is stepping away, but not leaving as a Fed governor, which is unusual. You have someone who's going to be voted in as the Fed chair who is a pro interest rate cut person, we can broadly say. But to your point earlier, it was not a unanimous decision to leave rates unchanged. There was some calling for interest rate increases. I guess it makes me wonder how many people see such different marketplaces than what we all see. And you and I've talked about this when we look at K-shaped economy, when we look at inflation at some particular range, but it's really not reflective of energy or food. What's the argument for cutting rates versus raising rates, and why is this such a difficult dynamic? Because it informs risk on, risk off every time.
Yeah. Well, Ron, I think you've asked a good question. I think you might be the person to answer that question, but I will lead off and say there's no question, because of this war or whatever conflict, that oil prices are higher and gas prices are higher, so that part of inflation is higher.
Yeah.
And then it has a trickle down effect because there's a lot of use of like petroleum and things like that and other products. That being said, other parts of our economy are really performing well.
Mhm.
I was talking to somebody yesterday, and he and I were joking that the chip stocks and the AI related stocks were kind of like the altcoins of a couple of years ago. I mean, these have real earnings and real products, but like the movements in some of these companies, they're doing tremendously well.
Yeah.
So that sort of, captured the imagination a little bit. So I bring that in that some parts of our economy are doing tremendously well.
Yeah.
And some parts of our economy are struggling, like Spirit Airlines, said today that it looks like they're going to wind down operations. So, we have this sort of really, like you said, a K-shaped economy, but I think because of the rising costs, because of the conflict and just, the oil prices, that I don't know that we're in a place where we could lower rates right now.
Yeah, and it's a really good point, David. I think one of the reasons folks in the United States get insulated, and I'm probably messing up the data, but is in orders of magnitude different. The U.S. produces something like 13 million barrels of oil a day.
Yeah.
We're net exporters. I think overseas, and I'm probably screwing this data up, I think Saudi Arabia does half of that on a daily basis. So those net impacts of prices don't directly affect us. And it's not just gasoline for, David's Bugatti. It's diesel fuel for ships, which affects food shipments, which affects fertilizer shipments. So I can see the perspective of inflation is potentially trending upward, but I do argue that the inflation data is deeply flawed, the way it's reported. I just don't think it captures enough data points. I don't think it's as responsive enough to market forces as it would be. So it'll be interesting to see where this goes. But I don't anticipate interest rate increases, but I do anticipate decreases later in the second half of this year. That's not a wager with you. I'm just pointing out, and I'd love your opinion on that.
Yeah, look, things can change if the conflict were to end. The picture would look a lot different. I don't see raises right now, especially going to midterms.
Yeah.
I don't know when though we'll see, them being cut. And actually it's an interesting segue into something else. It's, there's been a lot of institutional money that instead of going into maybe Bitcoin ETFs or going into tokenized treasuries. Because you're getting like an almost 5% yield and can trade in and out of it 24/7. Like that's an attractive yield for investors, especially if you're parking your money right now. And if you're not sure where risk assets are going to go, that's like one interesting place to park your money.
Yeah. And it's interesting because, 5 or 8 years ago, when you and I started having these conversations, maybe 10 years ago at this point, who would have imagined we'd be having conversations about corporate treasuries allocating money to tokenized treasuries?
I know it's fascinating. I mean, I would have thought we would have seen 401ks and things like that first, but this is, it's
Yeah.
really fascinating that way. And it's a way the market has evolved. And unfortunately right now it's been evolving away from, the altcoins and the broader crypto ecosystem.
Yeah.
So, and I guess the question is, even if we don't get clarity, what will be catalyst for us going forward?
But that makes me ask, I'm with you, David, but that makes me ask this question. It is not altcoin season. And I'm not talking about number go up altcoins. I'm talking about there are altcoins out there that have legitimate good use cases. My perspective is that sort of what's happening in global Wall Street and global financial markets sucks the air out of the altcoin conversation. The truth of the matter is most of the bigger players on the street, for example, are not going to need exposure to altcoins, which they're not getting that customer demand.
Well, it's not available. They're not being able to offer it right now also. So in fairness, that liquidity, people who want to buy it are going to have to go on crypto exchanges, besides a few ETFs. So in fairness, there's not the pool of liquidity totally open to a lot of the altcoins, but at the same time, they have been developing. They have more product, products are offering. They have more use cases, but it's still not being totally appreciated as far as token price goes.
Yeah, and again, I'm not minimizing alts, David. You and I have this a lot. There's some really good use cases. There's some crappy use cases. I'm not pointing to any particular token, but I there's a headwind for alts that's a stronger headwind than for broadly BTC, ETH, and some of the others in global markets. But David, also when we look at those headwinds, the other one is obviously Genius. We've got to pivot to the legislative stuff and the Clarity Act. It's funny you use the word clarity 2 or 3 times already. I'm like, is he mean Clarity Act or clarity the actual word? David, we had a conversation with Adam Goldberg on our previous legal working group earlier this week. Dina Ellis, shout out to Adam and Dina. The window's closing, David, and I want the audience to know whether or not you and I are of the same opinion that we are not going to get Clarity Act passed in this month.
We certainly are. I mean, we have this May to August narrow window now. Senator Tillis is now going to allow it to go to a floor for a markup, but we're already in May. Midterms are coming. They're going to be contentious midterms.
Yeah.
The window is closing, so May is going to be, in some ways, really, I think, the make or break month. It could possibly get done in June, but I think this is the month we're either going to see something happen or not, or see real progress or not. And I want to add one other thing. Senator Lummis spoke at Bitcoin 2026, and she was saying that if it doesn't happen now, this isn't likely to happen until 2030. That's her.
Wow. That's
her perspective. She's talked about that at Bitcoin 2026 and comments attributed to her otherwise. So, yeah.
Why 2030? Like post a next administration that's not crypto friendly, or?
That was her impression. Her feeling was it wouldn't happen before the end of President Trump's term, and maybe it'd have to be in the first 2 years of a new administration. So that was her take. So, it's very interesting.
David, let's do a little scenario analysis then while we're talking about this. So we talk about market structure, we talk about clarity, we talk about Genius Act, which actually did pass. We've also spent a lot of time talking about the regulators stateside that have been creating, I'm going to use the phrase market structure to the extent that they can. You and I have analyzed those. So many members of the WSBA have examined them more deeply, certainly, than I can. Is the market structure such as it is enough?
In terms of allowing institutions to list crypto tokens, or
to be more deeply involved in crypto tokens than they might have been candidly in the prior administration.
Well, remember that, since that memorandum between the SEC and the CFTC, you are going to see rulemaking and law made by those two agencies if we don't get clarity. So I think there's a view that they'll be able to, companies and institutions will be able to rely on that guidance if we don't get clarity. Now, obviously, the guidance with the Chevron deference change, can be, you can bring lawsuits against it and, claim that they're acting outside of their authority. But, the CFTC has the authority to regulate commodities, and crypto, and Bitcoin and some of the other cryptos are classified as commodities now. So I do think that there can be lawmaking made outside of clarity. It's just going to be different, and it may not be as long lasting.
Yeah.
So one last thing, Ron, I like to say, the SEC and CFTC guidance and rulemaking is sort of like a call option for the industry, that if we don't get clarity, this is something that we will get.
And I agree with you. I think there's one other item to add to that, which was the SEC, and I haven't read it in detail, David, and I'm going to paraphrase it. This commentary from the SEC on front-end developers in the crypto space, and how they're sort of, I don't want to use the word protected, but they're not necessarily automatically considered broker-dealers, for example, or exchanges. David, I'm going to rip up the script. Why is that important for the industry?
Well, look, while there is uncertainty, you don't want to be a front end and be considered a broker-dealer, because there's a lot of things that you need to do. I mean, I've set up a broker-dealer before. There's a lot of things you need to do that.
A lot of paperwork.
A lot of paperwork, a lot of background checks, a lot of financial checks, a very robust compliance infrastructure. Now, some of these things, these companies should have, but, you don't want to be in that world unless you're really fully prepared to be in that world and staffed up to be in that world. So you don't want to, you also the liability for being selling unlicensed securities, or not being a licensed securities broker. You don't want to be in that world, and you don't want to inadvertently fall into that world either.
David, is it as simple though as being a front-end capability that doesn't take a transaction fee and doesn't touch crypto, doesn't custody it? Is it that simple?
Can you repeat that, Ron? I want to just think about that.
So I think one of the when we talk about what the SEC's put forward, one of the ways around having to become a broker-dealer, having to become an exchange, is you create a front interface in a business that, as long as you're not charging a transaction fee for what happens with the platform you've created, as long as you're not custodying customer crypto, you don't need to necessarily register. Is it that simple? Can you be a matchmaking service and not necessarily need to register?
I mean, I think it's more nuanced than that.
I told you it was a dumb question. I knew it was going to be a dumb question.
No, I think it's a more nuanced than that. I think that's something we could delve into in a whole episode. But I just think that you don't want to be in a place where you're unsure whether you are, falling into those requirements or not. Right. And obviously, custody adds a whole other level of regulation, and really it's challenging if you're a custodian, without the proper infrastructure. You just can't operate that way. But I think there's a world where you can be a front end and be a matchmaking service, and maybe even take a transaction fee, and avoid a lot of that regulation. But it's still up in the air. I mean, look, our DeFi platforms, some of them take fees, and they are not broker dealers.
Right.
But I think these things need to be spelled out more so people know where they fall and where they don't.
Yeah. And again, I know I softballed a dumb question, David. There's a lot more nuance. But the reason I bring it up is I've had more than a couple of colleagues that are technologists saying, oh, this is great. We can spin up an interface in a company that can do X, Y, Z. And my response is, be careful what you decide X, Y, Z is. David, there's still so much to cover. You mentioned DeFi, which was an easy segue for me. I'm just looking at the alert. Something like Lazarus drove a record of over $600 million in DeFi hacks. We saw Kelp DAO, we saw Drift, we saw all the challenges there. And I feel like a lot of the media conversation about that has been crypto, depending on the venue, crypto bad, obviously, but also this is why institutions aren't getting more deeply involved. I'm not sure I fully agree with that. Do you?
Get fully involved in DeFi or in crypto?
Both, broadly.
Well, clearly, like on the crypto side, institutions can be buying spot Bitcoin, spot
Yeah.
Ether, ETFs. So I don't agree with it on the crypto front, on
Yeah.
the spot side. On the DeFi side, look, you don't want to be in a situation where you're risking your capital if you're in DeFi.
Yeah.
And I think that, look, I think DeFi is going to be successful, and I think the product is so amazing and unique. But with the advent of AI and Morpho and the ability to like find bugs and things, everybody has to really like rethink what security looks like.
Yeah.
And really, even though they're not circuit breakers in DeFi,
Yeah.
how do you prevent like these situations that cause massive, cascading issues?
Yeah.
Like maybe there has to be some sort of like limitation on some of the rails so that they can't cause this sort of cascade.
Mm-hmm.
I don't know what the answer is. I'm not supporting like limits, but it's just something we have to think about. We can't have like a $25 million hack suddenly cascade into like a $300 million loss.
Yeah, and I've been kind of noodling on this, and I'm not sure I get the answer yet, because how do you put things like circuit breakers in the world of DeFi and it's still DeFi?
Yeah, I mean, I think that also, I do think it chills institutions wanting to stake, and use DeFi for, revenue or for yield when they have a chance that they could lose their principal. I
Right.
think that's just a very tough position to be in.
Yeah.
So I
My
think,
my argument is that DeFi will take several more years to become, I don't want to call it mainstream, but at least more plugged into financial markets.
yes and no. My take is that there's probably going to be sort of private DeFi also, where there'll be ones where, there are closed garden DeFi protocols and things of that nature. But
Mm-hmm.
we have a security problem that we need to work through. And I don't want to like blame one project or another and
No.
everything that serves us, but we have to really be able to stop these intrusions. And maybe there needs to be some, best practices around key management. And I mean, there are, but maybe they need to be revisited as far as,
And they're not unified,
what,
right? There's no unified key management.
yeah.
It's basically how each of them does it.
But I mean, I think cyber is just becoming a bigger and bigger problem across.
Yeah.
Look, there are companies that get hacked and have their financial information spilled out into like, non-crypto companies and have
Yeah.
they get hacked and their PII of their customers get spilled out on the dark web or held for ransom. I mean, we see that all the time too. So I think we have a broader technology issue across both financial services and companies generally, but it's just more acute because of how rapidly it can affect the DeFi markets.
Yeah, and it's not just a DeFi or crypto issue, to your point, David. And it makes me ask this question. I'm almost curious how often this came up at Bitcoin 2026 Quantum. So we just finished a webinar earlier this week. Josh was on, Anna Lynn, a couple of other, Chrissy Hill, Christina Dolan, real experts on both, not just the technology of quantum and cybersecurity, but the legal aspects, the regulatory aspects. Was that part of the conversation, this kind of cybersecurity quantum concern?
Yeah, absolutely. Absolutely. I listened to one or two panels, but I do think that, my view on quantum is that it is going to be if we don't address it, it will be such a major issue for like everyday banking. Like
Yeah.
everybody's accounts are going to probably be, exposed first in the banking system and SMS and 2FA before breaking the encryption on Bitcoin. So I think it's sort of a broader problem across the board. And I don't think people are thinking of it that way, but it probably is. And by the way, I heard that the quantum presentation was excellent. So I'm looking forward to listening to it and, certainly share my insights. But It's something that needs to be really thought about, and I think people are thinking about it. I think some chains are really dealing with it actively. And at the Bitcoin conference, they talked about, do you have bigger block sizes? So they were coming up with different ways. Oh, here she is.
Jeez. Did the Gulf Stream just land, or?
It sure did.
Josh, your timing is impeccable. We were just talking about quantum, and I said, I know 3 or 4 people who are quantum experts. But welcome to the show, Josh. It's good to see you.
Great to see you both too.
The point we were talking about, and David, you were really eloquently explaining it, is like your perspective and concern about quantum is not just crypto. It's far beyond crypto. And Josh, David heard feedback. You were amazing with the other panelists on the webinar. We'll have that available on YouTube and on the newsletter for members as soon as we can. David was mentioning he saw quantum discussed at Bitcoin 2026. Josh, talk about it a little bit.
About quantum?
About quantum and the webinar and whether or not I should clarify.
So I would say of the panel, I am the least impressive by far.
I don't buy that at all.
I would say I learned a ton, just even in connection with preparation for that panel.
Right.
I guess just in terms of some of the key takeaways, is that helpful?
Yeah, please.
So one is that Q Day, whenever quantum comes online, could be, and obviously there are quantum computers now, but when there is some kind of potential quantum attack, right? Yeah. That could be really at any time. We're hearing years out, but some believe that certain countries with lots of mathematicians may have already figured it out, right? And certainly the time horizon for many organizations is now when it comes to trying to figure out how to address becoming quantum resistant. Because again, like cryptography is used in so many different types of things. It's used obviously in blockchain, it's used in payments, it's used in digital identity, so many things. So I think one of the other big takeaways is that it's coming, right? But also that one of the challenges is that the speed at which this quantum reality is coming is not matched by the speed of migration to a quantum resistant state. And so it is important, incredibly important. Boards are facing all kinds of competing interests right now, whether it's like trying to get their arms around AI or trying to understand digital assets, all kinds of things, plus not to mention all the other things in the world, right? Geopolitical issues and even just issues relating to their business specifically. But that it is absolutely important that organizations identify someone in some position of authority who is responsible for assessing quantum risk, for understanding where in the business cryptography is being used, right? And how, and who is responsible for coming up with some kind of plan, right? Yeah. And to the extent that people are contemplating migrating to, say, to, or even staying with their existing payment rails, right? Or if they're going to move, if they're tokenizing, any number of things, really at the architectural stage, if you're planning a long-term move or shift, say distributed ledger technology, you should be building in at the architectural stage. Just like we always say, you should be thinking at the architectural stage about regulatory issues. You should also be thinking about quantum resistance. So I hope that's helpful.
No, it was definitely helpful. And again, for everyone in the audience, thank you so much for joining us. We'll have the webinar up sometime early next week with Josh's commentary and the other amazing panelists. Josh, David, the question I often get is, it's not a quantum show per se, but it really is tangential to a lot that we discussed. That's really interesting, Josh, from the perspective of big companies with multi-billion-dollar technology budgets. It's really concerning when we look at state actors engaged in quantum. I guess the question becomes, for the quote unquote everyday person, what are they supposed to do? And I don't know that anyone knows the answer to that.
For the everyday person, certainly if you're talking about holding crypto, I would think about, there are certain things that the everyday person, depending on what their activities are, can do. But I would say, one of the things we discussed, Ron, was that commercialization of quantum computing and quantum technology, that's probably a ways away. Like that's further out there. So the average person probably may not be engaging
David's
with.
probably got a prototype commercial quantum computer somewhere at the compound, but other than that, everyday people aren't going to get it.
Yeah, I think if you're an everyday investor or a person who's contemplating, like looking into a project or a company, even if you're like buying shares in a company, hypothetically, trying to see if they have addressed a quantum plan, right? And I think obviously we'll have to worry about things like quantum washing, just like we have to worry about AI washing or greenwashing or all the like. But I think this is going to be an important thing to think about, because if you think about some of the data breaches that we've seen, oftentimes people will say, don't worry, the data was encrypted. Well, guess what? If people are doing harvest now, decrypt later, where they grab all this encrypted data with the intent of decrypting it and potentially using that data or using that digital identity in a fraudulent way later, then the fact that it's encrypted, it's not quite it's not quite as helpful.
David, during the webinar, I made this very ham-handed joke that I should just sell everything and get gold and go bury it in the mountains someplace. That went over like a lead balloon. But Josh, again, thank you so much. I think quantum is an important part of the conversation. David, I think the other important part of the conversation, and Josh, I'd love to hear your perspectives as well. There's this ongoing AI plus crypto dialogue. And I think I've seen this morning, David, forgive me, I didn't bring up the link, but I automated all of my crypto day trading with AI, and follow my example, click here. And of course, that's all crap. But David, it is an interesting point. How much of what's happening in AI will impact the use cases for crypto writ large, for the altcoins you and I were discussing a little while ago?
Well, look, I think, some of the exchanges are already thinking about like having accounts for the agentic AI agents to trade.
Yeah.
But I think more of it is along lines of stable coins, and also, using the tokens like as they're doing their work or trading them. Look, in a perfect world, it'd be amazing if we could all roll up these systems and suddenly make 5x, and then just while we're sleeping. And maybe there are a couple of people who are really smart who are doing that. Yeah. But I'm sure the like 20 different people you see on your X feed, they're not all doing that.
I don't know. You said there's really smart people doing it, and Josh had that smile. I almost wonder if there's a rig somewhere on the compound trading for her.
Look, I've certainly been playing around with OpenClaw and seeing what it can do, but I'm definitely not at the level as at the people who are doing this, or professional traders. But look, there will be a world. We already see trading done, we see it done sort of programmatically right now. So, just if you have maybe an AI agent is just the next evolution of algorithmic trading. And now it's just having like a AI supervising algorithmic trading. And that's what it is.
Josh definitely has something to add to that.
I think you have to be so careful with what your objective is that you give to the AI agent, right? Because it might be fulfilling, on its terms, the goal that you set for it, but the means by which it does it might not be as linear as you might have thought. But I also think, and other minds I'm sure have thought about this much more than I have, but just really when you think about agency law as it exists right now, and liability, right? Like, and how that works, like how exactly will it evolve when you have agents where they might be your agent, like we're calling them AI agents, you've set them on this path, but like, do you know what they're doing, right? Do they know what they're doing?
And how responsible are you for what they're doing?
That's exactly where I'm getting at. And also questions like, if your AI agent is defrauded, like, do you have a claim? Like, does anyone like?
Yeah. There are a lot of, Josh is just touching the surface. There are a lot of issues around that.
But this really touches on the surface of a lot of conversations the three of us have had in the past 10 years plus with so many other colleagues, which really is the innovation of law and regulation in the wake of these innovations. Think crypto, think quantum, think AI, think so many other things. And Josh, to your point, I do grow concerned. Like we were complaining about innovation, the legislation not keeping up with the innovation of crypto. It's definitely not keeping up with the innovation of AI. Do you have that same concern?
100%. I mean, I think the thing that always comes back to me is this idea, or not idea, but that example where you had the two AI agents and then they started speaking in gibberish once they each realized that the other was AI. Like,
Yeah, and
what do
didn't
you
have
do
to
with
talk to
that?
us.
Yeah, I do think that, for example, one of the things, if you look at what's being done at the federal level, right, as opposed to the state, there's lots of state regulation on various things having to do with AI that's developing, like a patchwork. But at the federal level, I mean, my general understanding is that the administration is trying to streamline things to get rid of a lot of red tape, so to speak, and to kind of have an easier glide path with for AI developers and others to kind of position the US as being the leader. So I do think there's a tension there between regulations keeping up versus intentionally being, you know, I don't know, not too onerous.
Right. And David, this is a common conversation everyone has, which is what's the offset or the balance between innovation and regulation? And that's a loaded question.
Yeah, I mean, look, we've seen with crypto how it took regulation a while to catch up. And look, we don't even, look, we have a bill here, what, 10, 11 years after we've all been talking about this, and, which we hopefully will see pass, but we're not sure. And we're gonna have an opportunity to go to Washington and have conversation with some of those decision makers in a couple of weeks. But in fairness to the regulators, like, it's hard for people in the space to really put their arms around what AI is doing and what AI agents are doing. So it's a lot to ask them to regulate something that, like, as business people, we're still sort of putting our arms around exactly what we think it can accomplish.
Yeah, it is interesting. Again, it's not an AI show, but it is so part of every conversation that we all have. David, Josh, it's still so fascinating to me that the VCs are throwing billions at anything with AI in its name, the same way they're throwing billions 25 years ago at anything that said internet. And I don't want us to predict, like, any kind of negative outcomes there, but concerns about that? Are they overspending? Is there a bit of a hype cycle with all of this?
I mean, I think there's always a hype cycle, right? That I feel like that's part of the thing. And at least my understanding of, I mean, I'm not a VC. Let's all be real. But I mean, startups fail. A lot of startups fail. And so I think, yeah, that's, I guess, you make a big swing and you hope that you connect, and you hit a winner, or whatever really horrible analogy that I just made up.
But it's a good point. Go ahead. I'm sorry, David.
I'm going to take a different view in that, of course, there's a hype cycle, but you can see the earnings of some of these companies and some of the components parts.
That's the difference.
That's the difference. And you can see the money that's like, so even if, let's say AI from a commercialization standpoint takes longer to adapt, you're still seeing the data centers being built. You're still seeing the energy being, energy agreements being procured. And you're seeing these massive earnings. I mean, it's just like, I'm only going to pick names in the chip space just because they're ubiquitous, but like Micron and, some of the semiconductor companies, they're just crushing it, and Google crushed their earnings based on, a lot of things they're doing with AI. And so you're really seeing tangible earnings from a lot of these companies. So I don't think it's the same hype cycle.
Yeah.
I think the same hype cycle comes in as when a company, I forget which one, was it Allbirds, changed their focus to AI,
Yeah.
and they went up 7x. That has a very crypto-like feel to it. Of
Can
like,
I tell
Like
you both a
Long
story?
Island blockchain. Remember
Yeah.
Long Island? Yeah.
Long Island. I say, my wife, who both of you know, and I were having a conversation. I said, "Hey, have you heard of this company called Allbirds?" And she said, "Yeah, they make sneakers." I'm like, "Not anymore. They do AI." And she thought it was the dumbest thing she had ever heard. But we wish them luck. I just want to do a shout out, Jesus Barcia. Greetings from the Blockchain Association of Venezuela. To our friends in Venezuela and South America, thank you for joining us. David, one last point there. You're absolutely right. I mean, 25 years ago, it was, here's $1 billion because you've got eyeballs and clicks.
Yeah.
Now it's, here's $1 billion because, holy crap, you're actually making money.
Yeah. And look, ultimately, like, we all on a daily basis see the benefit. Like, I love using the AI and playing around with it and using prompts. But commercialization is a different, process. And, I think one of the questions that's going to be asked is, can companies commercialize AI on a level where they can, show that they can offset the massive investments that are being made?
Yeah.
And that's
Josh, you notice that David says he's getting benefit from AI. I end up having arguments with AI because my prompts are just so horrible. But David, Josh, we're almost out of time. Just a couple of announcements for the group. Obviously, Josh, again, thank you for the quantum webinar. We'll have that posted. It was really, really great stuff. We'll probably have to do I think David, we got halfway through the deck and I realized we have like 5 minutes left. So we'll probably have to do a part 2, Josh. Next week, we will be in Miami for Consensus. I will be trolling around with David and Josh and some other colleagues there. And then the week after that, we will be down in DC meeting with our favorite legislators and regulators as well. David, I'm hoping Josh will let us join her on the Gulf Stream. Is that a possibility?
As long as Starlink is working.
Josh, David, what are you doing this coming weekend and how are you preparing for Miami?
Well, since I'm already down here and back and recovered from Bitcoin 2026, I have a fair amount of reading I want to do, and just a lot of catch up from being away. And I had some really positive meetings when I was in Las Vegas, so follow-ups from that. And also little basketball playoffs are going on, and so a little of that and maybe a barbecue in between. So some work and some fun, and enjoying the good weather that you guys will see when you come down to visit.
David, you're a blackjack guy, if I recall correctly. Did you win?
No, I'm a poker guy, but
poker. I'm sorry,
but a little craps thrown in. But no, this trip was all business. No time at the tables, but I do enjoy playing poker once in a while when I get a chance.
Josh, what about you?
Well, other than being sad that I missed Bitcoin Las Vegas this year because last year it was a blast, I will be stockpiling sunscreen in preparation for heading to Miami.
You and me both.
Yeah, I mean, I will be catching up on reading as well. Hopefully, planning to meet, like setting up a schedule for next week for exactly whom to meet and what to see. And I'm excited to see you guys in person there.
It's going to be fun seeing you all. For everyone who's watching, what's about me? Oh, goodness. Well, we just finished our submission to OCC on their notice of proposed rulemaking, and I'm on my 8th cup of coffee so far today, just getting everyone's comments in. Probably 5th. I lost count, David. But busy planning for Miami as well. Like you, Josh, I've got the case of sunscreen waiting to join me. I'm not used to David's sunny environment particularly, but it's going to be a great time. Really looking forward to that. And obviously the conversations for Washington, we're working hard to prepare for our DC trip. We're not lobbyists. Everyone knows that, but there's so much to share from Voice of Industry. So,
100%.
And somewhere in the middle there, I'll probably have dinner someplace with my wife and maybe a nice cocktail. But David, Josh, always good to see you both. For everyone who joined us, thank you so much. If we missed any questions you had, drop us a note, info@wsba.co. We will be back talking about our trip to Miami next week. Thank you, everyone. Bye-bye.
Thank you.